Hello, I'm Tony with Viser Business Tools. I'm going to take a couple minutes and show you just how easy this new projection tool is. Very easy, very user-friendly. I would compare its functionality to many medium and large business projection tools that are out there. I won't name any names. But anyway, we get started really at the leftmost tab and we just work our way to the right. We'll start in input financial data. This tool can be used for budgets, projections, business plans, cash modeling, financial modeling. You'll see that it's very hefty. You'd start by entering your name and your NAICS code. The NAICS code will be used for industry comparisons. So there's going to be a financial analysis page where there will be 15 financial indicators and ratios. Those will be compared to industry standards, and then your company's information will be scored based on that comparison. Here's where you would enter your historical data, and then you also have the option to enter data into the projection months for the first 24 months. Now, we have a feature here that won't let any unfinished data populate the projection. So I'm just going to enter a 10 here just to throw the balance sheet off by $10 and just show you what happens to the summary financials. Everything gets zeroed out. That feature is there just so if you're entering data, you're not finished yet, you want to go home, your unfinished data is not going to corrupt your working projection file. So we'll get rid of that 10. Now the balance sheet balances. Go back to the summary. All the financials for 2008 are back. It's just a feature we added to try to make this as user-friendly as possible. So in the historical area, you just enter whatever data you have. If you don't have any, there's nothing required here except the names, the NAICS code, and the dates. Then you go into head count. Every time you add a head count, the system automatically assumes that your office expenses will go up. It assumes that you have to buy a computer. You'd have to buy a desk, a chair. So at whatever level you set, all those items are going to be added as expenses on your income statement, and many of them will also be automatically capitalized and depreciated. Now also in headcount, you can see here a place to put hourly rates, but we've blocked those rates so that you can't see them unless you paint over them or double click them. That's really for security. If somebody's looking over your shoulder, you don't want them to easily see what other people in the company are making. Or if somebody would happen to get this printout, it's kept confidential. Now there's an area here to help your sales force figure out projected sales for Salesforce or your accounting department. That's usually done in concert. But it uses your sales cycle, it uses your head count for either production or Salesforce if you want it to, and then it also lets you enter a few other assumptions. Well, let's start at the top. You can tell the system whether your sales are generated by production personnel or by an internal sales force. So sales generated by a production personnel, that would be like a CPA firm, or even in a manufacturing firm. The production staff is really who's generating sales in a lot of cases, if you will. Architectural firm. But if you have a sales force, then you would probably want to hit category 1. You still have an option to have production personnel, even if category 1 is the more important category for you. So this is designed really to work with just about any business. Now the sales cycle, you can have 24 months here, so your sales cycle can be as elaborate as you want it to be. You can use numbers in the sales cycle or percentages. You could use historical sales. Now if you do use historical sales, you'll get a calculation that will tell you on average how much each person generated. So if it's your sales force, you can you can have an expectation for every time you add a head count what they're going to generate. Then you plug in your revenue generated per person if you like, and your sales will be calculated using the sales cycle and that amount. You can also just enter a total amount here, or you can use this area just to add an amount for sales. I call it passive sales here, but you can also use it for your total sales. And then you can also tell the passive sales category what month that it's going to start generating. So, if it's November, then fine. The passive sales will stop dropping into your financials on a monthly basis in the month of November. Okay, and then you've got here projected increase in sales for the second, third, and fourth year of your projection. If it's an aggressively growing company, then you'd want to use a higher percentage. You can also plug in an increase in your production efficiency. You would certainly expect that with a company that's maturing, so there's an option here. Then you also have an option to enter an accounts receivable collections formula. And absent a credit policy, perhaps everything's coming in by cash register, so you can just override the AR formula and just tell it that you are cash basis. Now once all that's entered, you can see in the highlighted area that you have allocated sales by month. You can see in month 2 that it's very weighted, and that's because we entered 120 up here compared to 10. So if I bring that down, it will bring down that weighted sales category. And then also, if you remember, we had passive sales starting into the month of November, and you can see here that November sales have begun going up. Then we had an increase, so in year 2 that starts going up. So it's a very interactive tool, very powerful. The third input area is assumptions, and in order to help you with your assumptions, we added a couple of columns here. Well, 3 columns total. You've got 2009, 2010 actual activity, if you have actual activity, and then also the first year, the first projected year. Whenever you change an assumption, you get instant feedback, and then of course you have comparison if indeed that makes sense. So this may or may not make sense. It depends on if you're changing the nature of your business into your projected year. You can change interest rates, and instantly you get feedback on what your total interest expenses are. Here's depreciation. We'll get into that in a second. So you go down, and every income and expense item is represented by a yellow highlight tab, which feeds right into the algorithm. So each expense has a certain category behavior, and you're just predicting what your expenses are going to be. Of course, the most important is sales, and that's why we spent so much time with that very complicated algorithm for sales. Hopefully we've made it user-friendly. Now you can enter a depreciation schedule, your historical depreciation schedule. You'd enter the totals up here, and then new items come in based on, well, head count, and then also you had a category for startup expenses. We had that coming in September. You can change the useful life. So for startup expenses, which is coming in September, you can tell it that it's going to be 10 years, not 5, but we just wanted to provide that flexibility. So we've moved down the line. We've gone through all of the input items, which are labeled with an I, and then you go to the area that actually creates a projection for you. Now it'll create a full report if you want it to. You've got the binder cover, the binder spine, table of contents, summary financial data, and then detailed financial data for the first 2 years. So that helps with the cash modeling. I just wanted to show you quickly the financials that you get. You've got a balance sheet, an income statement, and then a direct method cash flow statement. So it's a very useful tool. We like the direct method a lot better than the indirect method. And then you have your assumptions, your headcount assumptions, your sales assumptions, and then detailed assumptions by expense and income category, and then a reprint of your depreciation schedule. Now, one thing we are adding, as I mentioned, is the financial analysis with the NAICS codes. We're lucky enough to have BizMiner that is going to populate that database for us. And so along with this projection, you're going to have financial analysis capabilities for 15 different ratio categories, ratio analysis and other indicators. Now we'll also do an Altman Z for you, but certainly you'll see that in the beta version. That is it. The financials are that easy to put together. All the categories, all the coding is here for you. There's no fumbling with Excel. Excel's a great tool, but when you're doing something this complicated, the one thing you know is going to happen is you're going to make a mistake, and we're trying to mitigate that, trying to make the preparation process for budgeting, for projections, or for business plans as easy as possible. Look for this tool to come out at the end of September, and I hope you like it.